Couple last points. So the statement of cash flows is not required for fiduciary funds. We use the statement of cash flows for the proprietary funds only. So we don't use it for the governmental fund either, because cash flows, right? This is going to be cash in and out. This is going to be business activities. So these use full accrual accounting, the both funds, but cash flow is only required for the proprietary fund. So another fun fact you might have to answer on the exam. And when in doubt, for sure, print out some financial statements and get familiar with them. Lastly, notes of the financials and RSI require supplementary information. What do you need to talk about in addition to presenting the actual financial statements? Well, in the notes, similar to corporate accounting, you basically put anything relevant to shareholders or like to the people whose money it is that you're holding in those fiduciary funds. So if it's a pension, we got descriptive information of benefits provided, meaning, all right, you'll be paid out for the rest of your life. Who's covered by them? How many people? And are these teachers? Are these utility workers? The pension board of directors, who's administering the pension? We've got disclosures that include the policies and contributions to the policy, how much the government's contributing. Now, this is nothing too crazy, right? This is what you'd expect to find for any pension plan or sort of trust fund or fiduciary fund. How do you determine the fair value of the assets in there? What procedures do we use? What valuation methods? Who are the major pension plan owners, right? Maybe half the money is going to a one member for some reason. The annual money weighted rate of return on them, like, is this pension plan doing well? Because if it's not, maybe we should do something about it. That would be a big issue. Do we have a net position? Do we have an asset or liability? Like, is the plan underfunded? Does it not have enough money to pay out? Maybe it paid out too much already. It's looking like Social Security. Too much has been paid out, and it's operating a deficit. But if maybe business is booming, the markets are hot, it's a net position asset because there's more money in it than it is owed to the recipients. Lastly, what else are you going to include in those notes? The financials, assumptions, and other inputs used to calculate the total pension liability, such as inflation, salary changes, and mortality assumptions. So if all of a sudden everyone's living a lot longer, you're probably going to have to disclose that and say, okay, we've got a lot more payouts in the future that we'll have to pay. People are living longer now and they get paid out the rest of their lives. So that's a big thing. Salary changes, if you're getting paid a percentage of your salary, well, salary changes will affect that. All good points to keep in mind for our fiduciary disclosures.